Guys and girls, is the House of Trade with Justin Benson. Look, all of the pleasantries aside and the platitudes, is the market for crypto over? Because it's certainly starting to feel like it's over, right? We've got a market meltdown. I don't mean to be hyperbolic, but it's a bloodbath on these streets. These markets are melting down. Is it over? Because it's not just Bitcoin anymore. We've got crypto, altcoins, stocks, all down. Treasury yields up, dollar firm, gold going all over the place, whipsawing. Like, is it actually over? Are we at that point now where successive attempts at the highs have been made and it just hasn't been able to reach it? Is it a liquidity problem? Is it something to do with the Treasury General Account? Is it something to do with the expectations for interest rates? Or is it something to do with AI? Well, let's try and discuss it. I think the main thing to be aware of right now is that it's not a crypto isolated event, right? Like, normally we associate crypto with a pure risk asset play. And it's not to do with just risk aversion right now. It's the entire market. And it's definitely being led by these AI names and the valuation concerns around them all. The Nvidias, the AMDs, the Intels, the OpenAIs, even though OpenAI is a private company. And this circular orgasmic jerk off that these companies are seeing. People are worried. Maybe rightly so. And where's that being expressed? Well, it's being expressed in the high beta assets. Things like Bitcoin, things like Ether, things like Solana. That's where you're seeing it first, because that's where the hot money is. That's where the people have the shakiest hands very often. And that's where the markets aren't as robust and aren't as developed. And therefore, they're prone to shakeouts. It happens. Man, recently it's been the worst day for stocks in a while. In a whole month. And the VIX index is trending up. I mean, I think yesterday or the day before, the VIX was up 20%. 20% move in VIX vol in a day. And not even vol of vol, just the VIX, pure VIX. S&P was down 2%. Nvidia was down 4%. Tesla down 5%. Some of these real doo-doo coins, I'm not going to use the expletive, they were down 25%, some of them. Mad. BTC underneath 100K. It's not just isolated to crypto anymore. It's a broad-based market sell-off, right? Nvidia, AMD, Broadcom, AI stocks down. Crypto stocks also in the red, right? Bitcoin below 99K, dipping below that, not being able to find buyers underneath that. So where does it take us? Where do we go right now? Well, I think it's very, very much to do with valuations and also sentiment driven. The sentiment right now is all about discouragement, fear, hopelessness. But I think we all know as market participants, especially if you've been in the market for a while, or if you've held Bitcoin and you know it's a 40 vol asset and you know it's prone to drawdowns of 80%, people are like, no, not again. I don't want that to happen to me again. I've been there. I've held it from the beginning. I've seen drawdowns of 90%. I thought 100K was a base right now. I've been told that it's a foundational number. It's a foundational level. We're not going to see 70 again. We're not going to see 60 again. But maybe we are, because right now there's fear in these markets. The way Bitcoin is trading, it's being heavily distributed and it's struggling to find buyers on dips. That is maybe the beginning of a bear market. And if the blue chip cryptos are going, then you better believe that the alts are going to be selling off hard, right? Right now, there is a sense of hopelessness. People are worried. People are worried for the economy. People are worried that the interest rates aren't going to come to save us. People are worried that the the commander-in-chief, Donald Trump, isn't going to be the bastion, the monolithic entity for crypto that he was. And the only way you express that, when it's become a situation where Donald Trump and the administration is determining the fate of crypto, you're on shaky foundations. One tweet from this guy can cause things to rip 20%. Or to fall 20%. I mean, it's great if you're on the correct side, but if you're not, that's terrible for a long-term holder. For someone who's been encouraged to hold Bitcoin as a store of value into a pension fund, that's a terrible situation for you. Or if someone who's a new trader who's touched the markets, or God forbid you're trading a perpetual contract, or you're 100 or 1,000 times leveraged in some of these insalubrious brokers, and you're being wiped out on 1% moves, 2% moves. Okay, you could say maybe that's not probably the wisest thing to do, but at the same time, it's going to shake your foundation. It's going to shake your belief in the system. It's going to shake your belief in the future asset that is crypto. It's going to shake your belief in all of those things. The sentiment right now is one of dread. And we know how these things can go, right? We know that once the sentiment starts to get hit, It's a cascade. It's a cascade of worry, right? What's the famous phrase? Markets climb a staircase of hope and they go down a cliff of worry. It's so fast when it happens. There's no one catching it. And then the algos are selling. The algo selling begets more selling. The stop losses are getting hunted and getting filled. People are losing all hope. People are trying to protect what they have. Sometimes it's going to be a point to buy. But to get to that point to buy, you need to kind of take a lot of pain. But you do have to kind of question, is this selling rational? Or is it just a combination of that part of the cycle where it's extreme fear? You can't look at Bitcoin and the stock market and think, hey, we are not kind of approaching overbought levels here and frothy overvalued levels. So a correction was definitely due. And if you're looking at these markets, as I do on a daily basis, and you're seeing Bitcoin struggle to make like successive attempts at higher highs and just like lower lows being formed, then technically, from a technical perspective, these kind of drawdowns are expected. These pullbacks and retracements are expected. They're not out of the realm of probabilistic outcomes or the distribution of outcomes. It kind of makes sense, right? But when there's selling can become irrational very quickly. And when you are trading on a general like market perspective, right? Crypto, stocks, bonds, currencies. We're looking at everything kind of whipsawing and being at the whim of a capricious leader like Donald Trump really dictating the market, and the Federal Reserve losing independence, the economy slowing down, the Federal Reserve path trajectory not being completely clear. Like, crypto is going to be the first one to fall. If you're looking at your portfolio and it's made up of bricks, and crypto is one of the bricks, housing is one of the bricks, bonds are one of the bricks, equity is one of the bricks, crypto is going to be the one that falls first. 100%. It's the highest vol asset, and it's going to be the one that falls the fastest and first. So if you are looking at it from a portfolio-wide basis, just be aware of that, because you don't want all of your eggs in one basket when the irrational selling really begets more irrational selling. Because when that happens, there's no saving anyone. Everything that has a bid gets offered, anything that's in profit gets sold, and anything that, irrespective of the fundamental validity of the thesis, gets absolutely thrown out the window, because cash is king in those times, right? Now, what about interest rates? Why are interest rates affecting the broader market overall? Because remember, it's not just crypto anymore, it's stocks as well. Interest rates, we have been told, okay, Powell's leaving, we're going to get in Steve Moran, we're going to have a more Trump-friendly Federal Reserve Board. But the Fed still isn't playing ball. I mean, Stephen Moran was an outlier in terms of his forward projections for Fed funds, and he said we need a 75 basis point cut. He's also touted that we need to go down to interest rates of 1%. But as soon as he's like got closer to the position of governor, or like the position just being on the board in general, those interest rate paths have kind of been sullied. And if you look at Polymarket, like the propensity is to lean towards those people who are thinking that no cuts are happening in December, or at least like one cut less is happening. That means the dollar's going to be worth more. That means people are thinking the cost of money is going to be still more expensive, that the economy is going to slow down, there's going to be less marginal utility or less marginal capital being allocated to Bitcoin. I mean, simply thing is, like, lower interest rates, irrespective of the studies that might prove to the contrary, lower interest rates are thought to be positive for risk assets, essentially, right? Now, if the rate cuts for December are uncertain, that's really another knock in the thesis of where we're going with Bitcoin, right? If you look at a graph of Bitcoin versus interest rates, you can see that they are linked, and interest rates going down is positive for Bitcoin. Not always 100% correlated, but more often than not, it does happen. Chairman Powell, a hero to some, a villain to many others. I mean, I don't really care what the Federal Reserve are doing, as long as what they're doing pumps my bags. I know that's like bad for the mainstream economy, maybe, but I want a Federal Reserve chairman who's going to make money cheap, who's going to spend, who's going to loosen the faucets of corporate and fiscal profligacy, who's going to print more money, even though they don't really print money, who's going to add more reserves to the system, and who's going to make money cheaper, and who's going to make my bags and assets denominated in that currency more expensive. That's what I want. And Steve Moran is that guy, and Jay Powell hasn't been that guy. I'm not trying to say he's a bad Fed governor. He probably isn't. In fact, like, compared to other governors, he's probably done a good job in terms of being apolitical and sticking to his guns, right? But I want a governor who's going to pump my bags. And Powell's not that guy. So before, market participants were going into this thinking, hey, 100% we are cutting rates. Rates are being cut, and it's going to happen fast. Now, 50-50 odds, we're not so sure. That changes the discount model for equities. That changes how profitable companies are thought to be in the future. That changes the cost of capital for companies, which affects their valuations, which means high growth companies who are heavily in debt, companies that need huge amounts of money like AI companies for expansions, their cost of capital is going to go up, it's going to be a drain on the consumer, and therefore valuations are going to reflect that, which means in layman's speak, stuff's going to go down, right? So we need a governor, or we need a Federal Reserve that is conducive to a lower rate interest rate environment. Hey, the lower the better, because zero rate interest rates, reserve policy, that was great for our bags. I don't think we're ever going back there, and I don't think the market actually believes that we're going to have these 3 or 4 interest rate cuts this year, and it's being reflected. I mean, central banks, they cut rates when times are hard, right? But you could argue that this central bank is bowing under the political pressure of Donald Trump and cutting rates in a high inflation environment, which is kind of anathema to them. But nonetheless, as crypto holders, we want that to happen. We want money cheaper. We want more money printing. We want more helicopter and stimmy checks because it debases the denominator and it kind of goes in line with what Bitcoin was created to do. And all crypto benefits from it. Now, there's another big thing going on, the shutdown. The shutdown, weirdly, for things like gold has actually been positive. The shutdown ending has been positive for gold. You would have thought things like gold and safe haven assets would have been bid if the shutdown prolonged. But no, it hasn't happened like that. But I think that's for a very logical reason, and it leads me on to the Treasury General Account. Now, if you don't know what the TGA is, it's basically like the bank account, the current account, the checking account for the Treasury, who they use it to like send money out into the economy for federal workers and for other programs and other initiatives going on like that. And during this the shutdown, the Treasury General Account, it normally floats between like anywhere between 50 and 100 billion. It's accumulated $1 trillion. So as soon as the shutdown ends, where do you think that money's going to go? That's right, straight back into the economy, could possibly be inflationary, could possibly bid up risk assets, could probably go back into the economy. People are going to catch up on all of that delayed spending, the spending they weren't able to do because remember, workers haven't been getting paid. Rent's not being paid. Groceries aren't getting bought. Well, they probably are, but not to the same extent. Discretionary spending isn't as high. People aren't buying like items like, I don't know, cars and clothing and going to the movies or going to concerts, right? That's going to come out all at once, $1 trillion into the economy. And the gold markets and other risk asset markets to see that as like a continuation of fiscal incontinence, of profligacy. And it's great for risk assets, right? The shutdown, it delayed TGA injections into the markets because some of it does go into the market. Like $1 trillion, some of it going into the market is good for the market, don't get me wrong. But the uncertainty around whether or not these workers are going to be paid or whether or not the shutdown deal is actually going to be ratified is also adding uncertainty. We've got so many things happening right now in terms of the shutdown. We are flying blind. There's no data in the economy. Like, we don't know what's happening. We don't know about employment. We don't know about retail sales. We don't know about CPI. We have no idea what's going on. This is clouding the outlook for investors. And we all know that markets abhor a vacuum of power, number one, but they abhor even more uncertainty. We are literally living in uncertainty par excellence. This is the perfect archetypal example of flying blind. We have no idea what's going on. It's a miracle markets aren't in meltdown at the moment. We have no idea how to allocate capital effectively, unless you're relying on like private data surveys. I guess that makes more sense, right? But when the shutdown ends and the Treasury deploys liquidity and the illiquidity ends, and we get the data back, it could end up in a whole new paradigm where we are either in a new environment because the data reflects a new environment, or it's a continuation of what we have already been experiencing. So, is the Bitcoin cycle actually over? Well, I don't really think we're in that euphoric stage yet where we're seeing like 20k days, right? Or we're seeing like 20% days upwards. We don't really have huge FOMO right now. The buying and the selling is quite orderly, even though like 3% down in your portfolio, it doesn't feel like an orderly thing. We're not seeing people talking about like Lambos made out of solid gold, or like bragging, or the meme mania going around. None of that has happened yet. So I don't actually think this cycle is over. I think it's just like a natural reversion to moving averages and to the mean, and that we're trying to have a base here of consolidation to propel us to higher heights in the future. I definitely think like the only way for Bitcoin and risk assets is up. The only way it would reverse is if the market were to think, hey, the world and the central bank have got their shit in order. And we are no longer printing money out of our ass. We are no longer fiscally incontinent. We are no longer profligate. The governments are no longer for sale. The unholy mix between corporatocracy and oligopoly is no longer entrenched. None of these things are happening anytime soon. It's the status quo. And the status quo is to expand the Fed balance sheet and central bank balance sheet. The status quo is to print money. It's to be financially profligate. It's to enrich the wealthy. It's to enlarge the gap between the rich and the poor. And it's to debase the currency. And that is only positive for risk assets, right? We haven't seen an altcoin season yet. There's no broad signs of surges in that. Every past cycle, we've seen that before there was a top. And there's nothing like that going on right now, right? And so I'm not worried about that because we're not seeing the signs of euphoria. We're not seeing the altcoin seasons yet. And the cycles are just elongated nowadays. So people are like, oh, what's going on with the cycles? Well, dude, the cycles aren't as long as they used to be. Right? The cycles are more elongated. They are different. They don't respond to the halvings in the same way as they used to do. We are maturing as a market. The market's bigger. Cycles have elongated. They've stretched out. The current cycle could extend all the way into 2026 if you look at the mathematics and you look at the previous trends. I know past is not always prologue, but often it is the only way we can use a barometer to see what's going forward, right? A bad next to 1 to 3 months may be more indicative of a cycle ending, but it doesn't by any means mean the cycle is actually over, right? The institutions haven't stopped buying. The institutions are still advertising. The institutions are still taking flows. They're still attracting massive flows. Institutional ETF flow, there's still momentum, but that could obviously flip on the other way as well, right? One strong week of inflows could absolutely change everything in this market, for the good or for the bad. We have so many positive and possibly negative catalysts for 2026. We've got rate cuts, we've got ETFs, we've got demand from institutions, we've got a macro recovery, we've got the Trump administration like buying crypto assets ad nauseum, we've got the Treasury General Account, we've got the possibility of more rate cuts, we've got the possibility of a Bitcoin reserve. Like all of these things are positive factors. But in conclusion, yeah, today is painful, but I don't think it is the end. There are some bottom signals flashing from a technical basis of being like oversold and a foundation being bought and buyers coming back into the market. There's no top behavior present, which is great to see, right? So we're likely in an extended, elongated cycle. My main message is to stay patient and remain bullish, because that's what's worked in the past. It doesn't always mean past as prologue, but over an elongated time period, assets appreciate over time, right? And we're not holding Enron here. So yeah, I'm Justin Banton. This is the House of Trade. Share, like, and subscribe. I'll catch you on the next one. Ciao for now.